Hi everyone. So the topic for today is money. Oh, money matters the most. All right. देखो भाई ऐसा है कि सबसे बड़ा पैसा है. So when you have to,
Very good morning, learners. First of all, let me introduce the topic to you. And on your special demand, we have organized a session on smart wealth creation, minimizing investment and risk with AI and paper trading in finance. So let me welcome our esteemed session chair for the day, Professor Mohit Pandey. Sir has done MBA in finance, chartered financial analyst. Sir has 16 years of experience. He has also written a book called Fantastic Finance. His competencies are financial analysis, content development, mentorship, lecturership, financial research, training activities, academic research, industrial research. Sir has worked as a research analyst and corporate trader. Sir has also worked as assistant professor, and Sir has been a keen academician, especially in the area of investment, finance, and risk related activities. On your special demand, we are inviting Professor Mohit Pandey to discuss the topic with you. Over to you, sir.
thank you, ma'am. Thanks for this privilege. And sorry, I had started a little bit early, but money always excites me. Okay.
Sure, sir, no problem.
Yeah. Whenever it comes to the investment or making up the money, my mind goes on a roller coaster ride. Right. So the basic thing or the things about which we are always concerned about is how to create the financial security either in the present or in the future. Okay. Investment is something in which everyone is interested. Okay. How to make the money on the multiplication. But the right way is very, very hard to tackle. Okay. I always say uh, say in my all the theories that only greed kills the person, not the market, not the investment. इंसान को लालच मार, investment कभी नहीं. If you are systematic, if you are balanced, you will be definitely holding more than the sufficient money and the returns in the future if you go with the right process. Okay. Well, let us start. The first step in your investment scenario is first is the financial literacy. First, know what is finance, what it comes to, what are their uses, and how to invest. First is financial education. Second is budgeting. Budgeting is the most important because you have to manage the things like your survival, your savings, and what part of the savings you have to keep for the contingencies and what part you have to move into the investment basket. That is very, very important. Financial foundation. To build up any foundation, either the financial foundation or you are, you are holding up a shop of a grocery, you have to build up the stock foundation. What you have to do, you have to start saving regularly. For foundation, you need to have a buffer of any stock, commodity, or money. Here, your purpose is investment, so you have to start saving regularly to buffer up the ample amount of money. Okay. Then, what are the investment options? There are, in a broad way, I have characterized it into two. First is the government investment options. It is the safest one. Okay, government investment options has been even the from the era of the Britishers, when the East India Company used to make the people invest. After that, after the independence, the Indian government has started many schemes and many companies to do the same thing. All right, and now right now, when the mixed economy is playing its vital role, the investment has become very, very dynamic. Then the other investment options is equity shares, exchange traded funds, index funds, mutual funds, real estates. There are too many. Okay. But what it requires to is the proper analysis. At which thing you will be able to make the most of the money which you are investing. See, as my formula is either to invest big or to invest early. If you have started early, believe me, even that 1,000 rupees to 1,500 rupees monthly investment can bring you a golden handshake when you will be at the verge of the retirement, or you will take that, okay, I won't work again now. Okay, but it will require the long time span, 15 years, 20 years. Okay. So let us move ahead. Budgeting. First of all is to minimize your expenses. If you guys haven't read, please kindly read one book, that is Rich Dad Poor Dad. Okay. There is a comparison in between the other peoples who are looking out for the pump and show, for their society status and spending extra, and one person who was spending what was right for his survival and investing extra into the markets and other investment wings, and he became really rich. The problem of the Indian middle class is they want to look rich, and in the process of being looking rich, they are very often deprived from being rich. There are two different scenarios. Okay. Then expenses to income ratio. It should be minimized. I'm not saying that you became a skinflint and just deprive away from your basic needs, but one can survive on a standard life, even spending the average money. Then income retention ratio. The amount of the income which you are retaining with yourself, that is your income retention ratio. Suppose you are earning 100 rupees and you are spending 30 rupees on your survival. Your income retention ratio will be 70%. 70 rupee you are saving. All right. And what you will do with this retaining income? Suppose you are earning 100 rupees and you have spent 30 rupees on your basic survival. You have left up with the 70 rupees. First of all, create the emergency fund. Fund for health emergencies or any emergencies which are, you cannot predict those, like accidents or anything like that. It is not that you have saved up the 70 rupees and you are investing all of them. Okay. Create the funds for the emergency survival, for health emergency, for unexpected crisis. Then we came to the debt management. Right now, people have got various debt instruments like personal loans, credit cards. You should make it sure that the provision for EMIs, okay, provision for your installments should be there. Your credit expenses should be covered. Okay. But try to be debt free. This is the first thing. And never take a loan. Never take a loan for making the investment. Okay. Whatever you have to invest on your self-reliability, self-reliable sources. Okay. So suppose you are earning 100, you have spent 30 rupee for your survival. You have already taken 20 rupee for the emergency funds, and you have taken away 20 rupee for your EMIs, loans, and extra expenses. Now, what is the residual? The 30 rupee which is left with you, that is the thing which you will have to be on the investment. Now, investment, there are too many wings. I will explain it one by one. All right. Government investment, okay, schemes. The features, the minimum investment is as minimum as 42 rupees per month from the various schemes. You can easily get this much of it. Okay. Then the risk level. The risk level is from average to moderate. But I should say, if any big crisis hasn't came up, like war or any big supernatural calamity or anything like that, like, nuclear bombing, anything like doesn't happen, then it's a zero risk factor in the government investments. Okay. Then average rate of return is from 9 to 15% approximately, but here I am not adding up the compounding factor. Compounding factor, take an example like that. Suppose you have invested 100 rupee for 10% of the returns. For the first year, you will be getting 110. And the second year of your investment base will be 110, and you will be earning 10% on 110. That will be 11 rupees. For first year, you have earned 10, second year 11, third year it will be more. That is called the compounding effect. And if you are really investing on a long run, even the government investments with a minimum unit of investment, can provide you the returns as big as 60 to 70% just because of this compounding effect. Then comes the tax shield. Government investments are very often are subject to the tax relaxation. Okay, tax free or the minimum tax. Diversity. With the emergence of the modern market, government schemes are also offer wide range of investment options. This happens. Okay. Himanshi Parshne. Yes, Himanshi. Unmute yourself if you want to ask anything. Let me first complete this presentation, then you can ask. Okay. Other investment options other than the government, stocks and fixed incomes. In stocks, you can invest into the share market, and shares also has got the different variety. PSU shares like IRCTC, NBCC has gained a great profit, great returns. Like some of the blue chip companies like Tata, like Motherson Sumi, like some other also aspects like say Amar Raja batteries. Okay, then the mid cap stocks. Mid caps, the companies which are in between. Okay, they are neither too low and neither too much big. But they, in fact, now the investment has got into the share market a specific rule. More the risk, more the reward. Blue chip securities are safe, but the return will also be low. Mid cap, a little risky, but return will be high. Small cap, they give higher return than the mid cap ones. And the penny stocks, which I love the most. Most of the people say that this is a garbage stock, but there is nothing like that. You need to have the analytical mind. You can even make the electricity and other disposable products from the garbage also. Okay. So the penny stocks, the highest risky and the highest return capabilities are there into the penny stocks. Then fixed income instruments, debts, debentures, commercial papers, commercial deposits, T-bills. See, fixed income securities, they are the one of the safest. Okay, if they are secured, obviously. But even the unsecured debentures or bonds, they usually pay off the premium amount. You get the fixed rate of return, and these are very good when the economic crisis is going, when you are not aware about the market. Then alternative investments. First is metals. How many of you people know that the gold has reached 90,000 per carat from 73,000 within the span of last 40 days? Okay, very good. You have to keep track onto these things. Metals, you can store them on a long run. They are best to hedge up the inflation. Okay, and if you generate or buy, in a small quantity, these metals, this can really make you a king in a long run. Suppose if you had been buying 1 carat of gold from last 20 years, how much money you would have been holding with you. Okay, then we came to the commodities. Commodities are basically seasonal, or if any sudden event happens, like suppose you are holding up the umbrella, you have stored up the umbrella just before the rain. Okay, you will get it cheap, store it into your house, and sell it when the rain is came. Okay, so this is the commodities are basically seasonal most of the times, or any sudden events like sanitizers during the corona, the sanitizers and the other health products, they have gained up a amazing price bubble. 7 times, 8 times, 20 times even they have sold. Real estate. Real estate is the most consistent return giving investment. In India, right now, it is in between 14% to 18% consistently, and the rest depends upon at which place you are taking up your. Other alternative investments. This is my present research topic, and I'm writing another book on this because alternative investments is the most underrated and most ignored area. Potential antique value. Does anyone know that there is a stamp called inverted penny? It has got the valuation of 71 crore rupees to 200 crore rupees recently in 2018. And right now, it may be holding up a much more of the value. The stamp which is selling right now for 1 rupee, after 20 years, it will holding up the value of minimum 50 to 100 rupees. Means after 20 years, your 1 rupee will make you 50 times of the returns or even 100 times of the returns. And it is not just about the stamps, it is just like matchsticks, the people who collect that. Okay. Yeah. So you know about these things. Vintage paintings. How many people knows that? How many people knows the name of Raja Ravi Verma? This first painting has been assumed, which is still lost, Shakuntala. The price, the anticipated price is 1200 crore rupees. If someone luckily found that. Okay. So these are the vintage things. Even the notes, the currency notes, the 2 rupee note and the 1 rupee note. The 1 rupee note, the speciality was that the government of India was taking the authority instead of the RBI or the Reserve Bank of India. The government of India was taking up the authority or the guarantee that we will pay up the or the compensate the economic value of 1 rupee note. 1 rupee note, 2 rupee note, some of the metal coins with Indira Gandhi on its back, Jawaharlal Nehru on its back, they had been declared rare. And that is in India. The global market for the antiques or the potential antiques. What is a potential antique? What is a potential antique? The thing which is normal now and can become antique in the future. The best example is wine. The older the wine gets, the more the value you will get in the market. Suppose if you are holding up a distillery of a wine and you are producing a wine in 2025 and you held up 3 carats away, okay, this is the potential antique. After 20 years or 25 years, I will sell them at a 50 to 60 times of the present cost. Okay, so this is the potential antique. The regular antique, which are already rare. The potential antique, which are not rare right now, but they will be rare in the future. The stamps which you are getting right now, the paper stamps, soon they will be displaced or, they will be replaced by the e-stamps. After 20 years, the stamps which you are getting into your local post office for 1 rupee, that will be also a rare one. You will have to pay into the future 200 or 300 rupees to get them. The most valuable stamps from India is of Mahatma Gandhi. And the last value where it was accumulated was 10 crore rupees. Comic books. Who knows that the Action Comics first issue recently sold for 64 crore rupees. So these are the alternative investments. Other potential valuable items. So here is what will be your investment if you are keeping up one set of stamps from a post office, okay, of each segment. 1 rupee stamp, if you even take up the 100 stamps, it will be 100 rupee. After 20 years, whatever the minimum you will get, that will be at least from 100 to 10,000 to 50,000 rupees of that. So this is the alternative investment where Indians are not working at all. I'm very sorry to say. Yeah. If you want to say anything, kindly unmute yourself. Okay. Now, government schemes, public provident funds. All right. 500 annually is the minimum investment. 15 years or even, longer than that. The average rate of return is 7.1% to 7.5%, but the compounding will be much more high. The frequency will be much more high than this. Then national savings certificates, Sukanya Samriddhi is a specific investment for girl childs only. Senior citizen savings certificates, schemes, post office monthly income. Okay, so these are the national pension schemes. This is 500 rupees per month. Okay. So these are the investment which are really low. But if you invest them for say 20 years, 25 years, 15 years, at the end, whatever will be the large globe came out, that will be the bucket of money for you. And that too in the government investment, that will be tax relaxed item. Okay. Now, average return from last 10 years in different asset classes. Stock market 8 to 10%. Okay. Yes, Nidhi. I have only said one thing. Let me complete this. Okay. Then I will come to Q&A. All right. If you have got any doubt or you want any advice, I will definitely give that. Risk level, see, stock market 8 to 10%, but this is the overall scenario. There had been the stocks which had been not given even the 1% of the return. This is the gross return. These figures are gross. Okay. But the targeted stock returns, if you are putting up your mind, brain, and have got a good investment mix into your portfolio, that will be minimum to minimum 20 to 30%. And if you are investing into the stock market and satisfied with less than 30% of the return annually, then kindly don't invest into them. And I am talking about investment, not trading. I'm not talking about derivatives, options, futures. Kindly, until and unless you are very, very apt into that, then only go into that. खेल वही खेलना चाहिए जो अच्छी तरह से खेलना आता. All right. Then fixed income securities. The average return is 2% to 4%. This is the average or the gross return. Okay. Like taking up the universal set of all the fixed income securities. In reality, if you're putting your money into the good credit rating investment or debt instruments, you will be getting 10 to 14% pretty easily. Commodity market, 3 to 5%. The problem with the commodity market is the majority of the data in India is not available. You don't know your local grocery owner, how much stock he has been saving with himself and how much money he is earning. Because in commodity market, most of the money which is earned is black money. And this is not a small market at all. You will be surprised to know the vegetable vendor which came into my colony has got 2 of the duplexes with the same shop. This has got a very high return if someone does it systematically. Then metal market, 3 to 6%. This is the gross one. It includes silver, it includes brass, each and everything. But the targeted segment into the investment scenario is gold. And kindly Google what is the cumulative growth rate of the gold since independence of India. You will be shocked to do. Okay. Alternative investment, 6 to 8%. So these are the figures with where the data is available, but the actual figures are much higher than this. Kindly do your self-research also. Go to the Google and just type that I want to buy a vintage stamp, I want to buy a vintage comic book, I want to buy a vintage painting, and then see what are the prices, how much hike is there. Okay. So and in this market also, most of the money is in cash. So that is unaccountable. In reality, the alternative investments return are around about 28% to 30%. That is a shocking phenomenon. And yet it is so much in. Investment mix grid, maximizing return and minimizing risk. Suppose it has been decided by the risk level. The risk levels are basically the person who loves to take risk, okay, the person who is moderate or average, and the person who is risk averse. But I have subdivided these categories: low to moderate, high. Okay. So for the risky investors, if the risk level is low, typical allotment aggressive, 10% into the government securities, share market 40% because it gives highest returns. Okay. Then fixed income securities 20%, metal 10%, commodities 10%, real estate 10%. And likewise, the risk class, according to that, there will be the investment mix. Government securities are considered to be most safe, but the returns are typically low. What you require is to optimize the return of your portfolio or your investment grid with the lowest possible level of risk. See, risk cannot be eliminated. It can only be managed. And risk is always there. Even if you are crossing up the road, that is also risky. But it doesn't mean that you will lock yourself into the house. Not in making the investment is more risky. If you keep 100 rupee with yourself and you're not investing that, okay, after 1 year, the inflation will be 8 to 9%, and automatically the value of your money, it will came down from 100 to 92 rupees because you are keeping it safe. So investment is kind of mandatory in the present world. Offbeat investment instruments, fine arts, 6 to 9%. The highest is the classic cars. Okay, obviously. Rare whiskey, 12 to 15%. Stamps, 4 to 7% is the average return. Luxury handbags, like, these are the antique items. And these are in India still quite easily available. All right. In a nutshell, calculate the risk with the diversified investment, extended timelines for investment, and long-term financial goals. Now, golden rule of investment, as per me, I also follow Warren Buffett in this thing. Be fearful when the others are greedy, and be greedy when others are fearful. Whenever the market is falling, the biggest mistake the person makes is the wrong entry into the market. And the second biggest mistake is the wrong exit. The market is in bull run, people start buying the stocks which are already running high. And when the bearish time came, that is which is running right now in India, the market is falling, the people started selling their shares and taking up the exits. And that is literally very, very wrong. You buy the things when they are available at the cheap prices and sell getting the high prices. Just follow exact the opposite rule. Okay. Artificial intelligence and investment. What will happen when the machine meets the money? What is the difference? As a human, okay, if I'm making up the investment, I will analyze the things with my brain and along with the brain, with my emotions. I also have the greed. I also have the fear. I also have the fear of missing out. All right. I have got n numbers of emotions, which will somehow, tottering my simplified or simply investment making model. Suppose right now, the price of the Tata Tech is very low. My analysis says that this is a good time to buy. But my human mind is saying that, okay, what will happen if the market takes a further dip? All right. Or gir gaya to kya hoga? So here the emotions are making me, stifle about my investment decision. Examples in AI in investing, algorithmic trading. I will explain it everything. Okay. Then sentiment analysis. This is the most vital part. Portfolio optimization, risk management, and personalized investment advice. Algorithmic trading. Forget about the PPT for some time. You must have been, somehow, if you are educated, you must have been came across this thing, algorithm. If then else. Okay. Step 1, step 2. If step 2 is this, then what? If step 2 is this, then step 3, or else step 4. I'm taking up with an example of a stock. Suppose a stock has got its lowest 52 weeks low price is rupees 50. I've set my algorithm that buy the stock when it hits 50 to 50 rupees or the 52 weeks low. Okay. If the price will drop up to 50, my AI agent will buy that stock, or else buy some other share. I have kept 5 shares into the radar, which are likely to hit their 52 weeks low, and instructed my AI that whichever share is hitting up the 50 weeks low, buy that, and if not hitting, then search for the alternative, some other share. So this is one of the simple examples of algorithmic trading, and this is the future. I'm telling you very frankly, if you are looking out for your, bright future into the finance or the investment, kindly make yourself apt in AI within the time, and it is developing very fast. AI has got a very good thing, okay, that they lack human emotions. They only runs upon the set track of investment. They don't have any fear. They don't have any greed. Okay. First of all is programming, then mathematical concept. Obviously, it is based upon the calculations only. Then technological proficiency. This is the challenge. Right now, the IT sector is working on this only. How to tackle up the technological challenges into the AI investment. Risk management, obviously, it is always there, either the man or the machine. The management of the risk has to be taken place. Even if your washing machine finish up the closing, it started its siren that, okay, the machine has done its job. Now switch it off or it will be burned out. So these are the risk management features in the machine, one of the example. Then strong analytical knowledge. A machine obviously can make the, dependent analysis, not the independent, dependent analysis. Dependent analysis, the analysis which is dependent upon the figures, the mathematical concepts, the global news, these things. Okay. The independent analysis, which we humans do. Even if the stock is falling, we won't buy because I'm seeing the consequences of the World War III in the near future. So that, yeah, that investment will be a waste. Black hat trick. No. Right now, this concept is still under construction. Okay. The black hat trick, but it will be developed soon. Okay. This is not the name of any website or any tool. This is a concept. What is a black hat trick? See, this tool has been developing to cope up with top 3 problems of the AI investment. Okay. First, I'm just telling you that the independent decision. They take the dependent decision, but the person are trying, the IT experts are trying to make the AI so much sufficient that it can also take the independent decision. The money constant, sometimes we have to manage up the money. Okay, the market is falling. I can take the money from my cousin or from the bank or anything like that. But AI doesn't have that tool right now. Okay, they cannot manage up the credits. And then the right exit. So these are the things you are talking about, the black hat trick. There will be the 5 black spots that will be very soon emerged into the market, hardly in 2026 or 2027. So this is also one of the tool on which I'm trying to develop up a training course. Right. This is the algorithmic training. Now, sentimental analysis. This is the hardest part. As a human, we are abundant with emotions, but what about machine? How it will analyze the sentiments of the market? For us, it will be a simple bull or simple bear. What about a machine? How? So AI make the use of natural language processing to decode or interpret the text. Okay. Like you all know about the big data analysis. The words which defines our emotions, like, oh God, that means something wrong is happening. Wow, that means I'm happy. They are trying to fill up these words as a prompts to make up the sentimental analysis, to process up the data, to fulfill up the investment needs of the client. So this is something which is very, very hard, but as a prediction that this will be completely achieved into the next decade by 2030. So that is the anticipated. Okay. These data, whether they produce the positive or the negative signal to AI, and these data they will collect it from the different sources. You cannot watch the video and analysis video of a stock on 50 YouTube channels, but a machine can. It can also read up the comments. It can also make up the sentiment codes, and it can also came up with the sentimental analysis results and devise the market sentiments as per its own analytical ability. Simply, it will be bull and bear. But what the market is actually thinking, what a retail investor is thinking. And this is something which is used by a big brokering houses and other big bulls into the market in the future. So this has got a very bright perspective in future. Portfolio optimization. What is portfolio optimization? That is the right risk and return trade-off. The maximum possible profit with the minimum possible risk. And machines are very good in risk management. They can make up the calculations, fundamental analysis, like I have given up the prompt. Do you guys have ever visited screener.in, a website for the Indian stocks? Okay, yeah. You use the prompt in there. I want to see the penny stocks below 1 rupee with no debt. So these are the fundamentals which I'm looking out in a stock to invest. So those fundamental analysis, suppose if I have got an AI which can connect with the screeners.in and other Walmart, Big Bull and other investment websites and get the fundamental analysis done for me. provide me with a complete stock ready to invest. Then alternative data analysis. Suppose I have taken up a stock, a penny stock. Right now I'm working on a consumer, future consumers. Right now it is trading at somewhere around 50 paisa. Okay. So if the stock is under 1 rupee, suppose the stock has got no debt also, what alternative analysis I will do? Okay, has it got any future or not? Does any news is coming out that this stock can do well? All right. So this is what the alternative data analysis is. Then risk management, obviously. Suppose if I'm investing into the penny stock, I will divide my total potential investment into 4 parts. I will invest first part. If the price drops again 20%, I will buy another lot. If it drops again, I will buy another lot. So my average price will be, somewhat compatible with the present market price. And then portfolio optimization. I have got 10 penny stocks, 10 mid cap, 5 high cap. Okay. And then I have got my optimized portfolio. If I have got some AI which can do this for me automatically, I have to just put in my prompts. I want the list of these stocks with this fundamentals, with the alternative data analysis, with this much level of the beta. Beta is the risk factor. Okay. And then I will get an optimized portfolio. Risk management with AI, risk identification, risk analysis, risk evaluation and response, then risk verification and monitoring. See, these prompts are a little tough, but still, you have to keep up the stocks. The systematic risk can never be eliminated. But what you look out for is the unsystematic risk. There are some already pre-designed features for this, like upper circuit, lower circuit. Okay, you have got the right to give up the customized trading. If the price falls below 10%, your brokers will automatically sell the stock. Okay, you can devise up the buying price also and the selling price also. That is something which is a very basic of the AI, which is already been designed. But here we are talking about the proper risk management system. Okay, the optimization of the return with the minimum risk. And this will also take a time. Right now, there are only 7 prompts which has been developed for risk management with AI. And the aim for this is 300 prompts. Obviously, it will take time. But this is what I'm talking about. It is not future. It is present. It has already been implemented. It is happening right now in the market. If you are an MBA finance and if you have got the, potential, or you have got yourself, apt into one of the AI tools, you will definitely have got a good job opportunities. And if not the job opportunities, you can invest for yourself. Money is always useful. It is the most useful thing in the world. Philosophers say that money is not everything, but whoever says this already had got earned much. Personalized investment advice with AI. Have you ever received the call of the loan where the automated telecall has been, running that, okay, we are offering 6% of the interest rate on your account. We have got the investment scheme in blah, blah, blah in this real estate sector. These are the automatically recorded calls, which has been randomly given to the customers. It is replaced by the cold calling by the humans. Right now, it is the cold calling by the AIs. This is the first step of personalized investment advice with an AI. And soon it will, go on to the higher side of the ladder. When these things are more systematized, like you go to the HDFC Bank's website, there will be already a chat box open with some of the AI prompts. I want to know my credit rating. I want to know my loan eligibility. You click that and the AI will tell you what is the next and what is the options available for you. So this is the first layer of the AI. The 3-level advancement will be there when the AI will collect up your financial data, set up your whole budget, do all the things from top to bottom, and then tell you the best investment options. Task-based AI, some of the list I have given you, like Kensho, like it is used for financial analysis, data insight, predictive and analytical modeling, risk management. All right, then AlphaSense. This is for market intelligence, document search, AI-driven insights, financial research. Just AI is very, very popular. This is basically for the credit rating, credit risk modeling, underwriting, loan prediction, automated decision making. Just AI is basically very, very popular in between the investment bankers. This paid version is very good. Then ICEDI and IBM Watson Financial Services, there are n numbers of AIs which are already running and which are looking out for the consistent improvement into the market. Now we came to the paper trading. Okay. What is paper trading? See, there is one saying that practice makes the perfect. Before going to the war, the soldier has been given up the rubber bullets and a gun to hit up the target. There has been the mock drills, mock wars to make the person perfect just before they go into the actual ground. So that is what the work which is done by the paper trade. First time traders to practice trading, veteran traders to test strategies. Paper trading is actually nothing. It is some of the websites, some of the applications which are actually the running replica of the pre-existing models, like say MoneyView. Okay, MoneyView. MoneyView is a financial information sources website and app, and they have launched MoneyBuy, where you can actually trade, but don't lose or earn anything from it because it is actual replica of the real-time market. You are doing up the trading, you have got a portfolio, you have got a fake currency of 10 lakh rupees. Now you have to invest that into a mock. You have to make up a mock investment and see your efficiency. The way you are analyzing the trends into the market, the way you have designed up your portfolio into the market, whether they are optimized or not. This is for the first time traders. Okay. Now, veteran traders, if they want to test any alternative strategy, like right now, I'm kind of a moderate investor. I invest 50% of my savings into the blue chip only, 15% into the, say, mid cap, 15% in small cap, and whatever remaining is 20% to the penny stock. Now I want to test up a new strategy. What will happen if I will start investing 50% into the penny stocks and rest I will divide into the other asset classes? What I will do the paper trading. I will test them. It is a kind of a testing websites or practicing websites and apps. The pros and cons of the paper trading: capital conservation, emotionless trading. If the money is not actually going out from your pocket, you can trade freely. All right. Then experience building. Okay. Track record analysis. You can easily record all the trades you have made into past some time. Then mistake prevention, confidence building. If you are, even if you are doing up a paper trading and you are not gaining any actual money, what you are gaining is the confidence. Okay, I have made 7 trades right out of the 10. That means I can do it in the actual market also. Here you do the things just like in AI without any fear. Your sentiment analysis sector or your human sentiments are gone because you are not paying away the actual money. Then cons. Simulated experience, obviously it is fake, not the real market. No capital risk. If there is no risk, you can play smoothly but not cautiously. Okay. Doesn't account for liquidity, you are not getting any actual money. Okay. Then no commission fee, obviously. The trade practicing websites, they don't charge you anything. All right. Then the websites. Investopedia Simulator. Investopedia, I should suggest you one thing. I'm not getting anything, from this website to promote them, but this is the best websites for all the financial aspirants. Kindly visit that. Whether you are a CFA student, you are an MBA finance student, you are a ACCA student, these things are very, very much, this website has got all in all, it's a kind of a universal set of finance. Whatever you type on here, whichever term, asset-backed securities, simulated modeling of finance, they will provide you the details of everything. Then TD, okay, paper money, then TradingView paper trading, Thinkorswim paper trading, Ninja Traders. There are n numbers of websites. These are widely available. and they attract good traffic also. The problem with the people are they follow the people on Instagram or YouTube, which sell you just dreams that, okay, put it into the options and say futures and you will be earning huge amount of money. That is not actually the same thing. In options and futures, basically the sellers win or the people with the big money wins. The default probability for any retail investor to gain profit is 33%. And this is a default probability. The actual probability is hardly 17%. If you do 100 trades in options and the futures, only 17 times you will gain. The rest 83 times you will be at a loss. And then the people start cursing the market. Market doesn't keep anything with that. Okay. It gives the money from, it takes the money from one person and give it to another. That is how they operate. The market doesn't keep anything with itself. If you are at the loss, that is your greed. Without knowledge, if you start trading, that is the thing which will happen. That's why I always give, I always stress my students, my learners, the persons who are, taking the under training under me, that always go for the paper trading first, at least for the 3 months. Even if you are looking out to, making up the option chains or option payoffs or the, say, future contract basis, these features are also available in the paper trading websites. Okay. So now the presentation is over. I had kept 15 minutes for you people to ask anything which you want. Whether it is related to financial sector consulting, career, or anything like that. And kindly don't ask for the stock advice. Stock, you will have to do the self-analysis. Until and unless you are confident, you are having the confidence in yourself, kindly don't go for that. Don't invest on suggestions. And one thing, yeah, you can create your own AI tools also. If you even know the simple Excel sheet financial modeling. Keep up your prompts into the numericals like stock price, 52 weeks high, 52 weeks low, your present price of the stock, and your investment criteria. You can create your own algorithms. Okay, that will be the customized ones. And this practice, if you really get apt into it, you will get a tremendous future ahead. Okay. Now, if anyone want to ask anything, that's why I had told you that let me finish this presentation first, then I will come to the Q&A. Raising up the hand in between, obviously disrupts the flow. SIP, systematic investment plans. It is better to do the self SIP. Keep some amount of savings with you. Keep good stocks on your radar. And whenever the market falls, whenever the market takes the dip, buy on them and leave them, forget them. Okay, so since there are no questions, I just make the summary speech of this presentation and we will end up with that. Right. First step is always financial literacy. That means know your finance. Okay. Then comes to the ultimate residual, which is your investment basket. Then what items you have to put in that basket? Government investment options, share market, equity, debt, metals, commodities, alternative investment. You go to that step. Okay. Then budgeting, emergency fund. These all things I have already explained. Government, this is basically for the people who have got ample time. If you are young, you are say 20, 25, 30 years old, then you go for these. These are very, very good. And if you have got a limited investment scenarios, or you are a salaried person, you can invest only 5,000 in a month, 3,000 in a month, then you can go for this. All right. Instead of SIP, still government investment schemes are much more profitable and secure. Other investment options, shares, requires a bit of a knowledge. Okay. Fixed income instruments, obviously you have got that limit of a knowledge that you can check up the credit ratings. Then metals, commodities, this required the least knowledge, but the right time action. Okay. These are the details I have already shared. Then the average rate of return, investment mix grid, okay, from high risk level to moderate to conservative or the low risk level people. Offbeat investment instruments, like I have already told you, fine art, rare coins, vintage watches, all these things which are non-traditional. Then AIs. AIs I have already told you, explained it to you. You can do the self-research and kindly take this AI segment pretty seriously, because whatever I am seeing is in a decade or a two, the human intervention into the investment will be completely gone. AIs will take care of that. Right. Then obviously for practicing up, the paper trading is always there. First do the practice, then go for the actual work. Yes, Nidhi? Do you want to ask anything?
Learners, you can ask your questions.
See, I have left with 10 minutes more. Okay. Whatever interests you, either the alternative investment or the stock market or anything like that, you can ask anything in these 10 minutes. After that, I will be gone. Okay. At least from this presentation scenario. Then you won't be able to. Yes, Nidhi. So, ma'am, I think so that the presentation has been completed and the Q&A session is not likely to happen as people have got no queries. Okay, all right. So you can end up this session. We can sum up with that. Okay, ma'am.
So it is my pleasure to thank Professor Mohit Pandey for taking such an enriching session with you as you demanded a session on this topic. So I hope you have learned a lot about the topic, and thank you so much, sir. You've explained it beautifully and in a very interesting manner. We got to know a lot about AI and how it is applicable when you talk about trading and finance.
Yeah,
So, on behalf of Center for Distance and Online Education, I am very thankful to Professor Mohit Pandey for sparing his time and for giving this
ma'am.
insightful
One query
session.
has came, sir. Are you going to teach any subject in MBA Financial Management semester 4? How can I answer this question? What I'm asking you, the learners, that if you want anything which is related to finance, whether traditional or non-traditional, if you have got any confusion, if you're looking out for any future guidance, you can ask those questions in this session. Okay, whether I will be going to teach or not, that's a different thing. That is not the topic of this presentation. If you have got any other query, you can make.
So, we are very thankful to sir, and on that note, it is our pleasure to end up the session, uh,
Yes, ma'am.
which I hope you all learners have really enjoyed and really have learned a lot from the session. Thank you so much, sir.
Thank you, ma'am. Thanks for the chance.
Thank you, sir. Thank you.
Yeah, take care.